Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about how I believe that Bitcoin is going to rally all the way to at least $130,000 by the middle part of next month. About a week ago, on Tuesday of last week, we made a prediction that by midnight on September the 17th, Bitcoin would hit at least one time $118,000. Well, last night, Bitcoin, after the effective federal funds rate decision, rallied up to $117,947, just about $50 shy of our target at, get this, 11:40 p.m. at night, 20 minutes before midnight. Almost an exact perfect call. And today I'm going to share with you what our next call is and why I believe that's going to happen. We are going to talk first and foremost about the effective federal funds rate decision that was just made and Jerome Powell's speech. And then we're going to be building a new chart from the ground up that will chart our path towards $130,000. So if you enjoyed today's video, make sure to hit that like button, smash that subscribe button, and leave some comments down below because I'd love to hear what you guys think about today's video. Let's roll up our sleeves. Let's get started. First thing that we need to talk about is the fact that yesterday we did see a rate cut on the effective federal funds rate. We saw a drop down to 4.0 to 4.25, which is the now current. This was from our previous range of 4.25 to 4.5. The reason that this is so important is because the effective federal funds rate more or less produces the bond market, and the bond market more or less produces all of the other rates in the overall economy. On top of that, the effective federal funds rate basically underpins all of the other rates in the market, such as the credit card rates, the mortgage rates, short-term loan rates, HELOC rates, business line of credit loans, etc. And so with the effective federal funds rate coming down, this leads us into a near and long-term future where we are going to have easier, cheaper capital, which will most likely be massive liquidity that will allow Bitcoin and the United States stock market to run very aggressively. This is very interesting because generally the Fed had been keeping rates very restrictive up here between 4.25 to 4.5 as a result of the still tough to control inflation. We're still looking at inflation around 2.8 to 2.9%. The fact that they've dropped interest rates after spending 5 years trying to get inflation back down to target 2 and have been unsuccessful is honestly kind of a white flag moment where the Fed is more or less admitting that they're just not going to be able to get inflation back down to target 2. When Jerome Powell was pressed about that yesterday at the press conference, he really didn't have a whole lot to say other than we're going to continue to try and get it down to target 2. But they have put the forecast for when they're going to be able to get inflation back down to 2% all the way out to 2028, which is just completely and totally laughable and is probably not going to happen ever again. So target 2 is something that is probably going to become about as mythical as a unicorn. And so the Federal Reserve has shifted towards trying to tackle the issues in the labor market. We've got much lower labor market participation right now than we've had, which leads the effective federal funds rate to needing to be cut. In other words, here's the most important part. The Fed is basically, in my opinion, given up on trying to control inflation. That is the exact base case that we need to see Bitcoin to rally to the freaking moon. And that doesn't just, that's not all. We also have more or less confirmation of another 50 basis points of rate cuts this year. When the SEP and the dot plot came out at the meeting yesterday, the 19 members of the Federal Open Market Committee, pretty much every single one of them predicted at least 50 basis points of rate cuts by the end of this year. There's only 2 rate cuts left, so that means another quarter of a percent, 25 basis point rate cuts this year in October and also in December, and then also probably another 50 basis points of rate cuts over the course of the beginning half of next year for a total of 4 rate cuts over the course of the next 12 months. After this announcement was made, Donald Trump came out and basically said, Jerome Powell's an idiot. He should have dropped it by 100 basis points right now. That's what I would have done because I'm Donald Trump. You know, he's got everything figured out. You know what I mean? So that's what Trump said he would have done. So if Trump was in the Fed, we would all just be borrowing money against our house to buy Bitcoin right now. Either way, in my opinion, the Fed has basically given up on trying to get us back down to target 2, which means that inflation is going to run hot, which means it's more important than ever that you own assets. And that leads me to something I want to mention today. We've got a new sponsor we're bringing on, and this one's a really cool one. You're not going to want to miss this. Don't skip this. I'm only going to spend like 20 seconds on this, but this is called Stamp Seed. Now, Stamp Seed's really cool because if you don't know, private custodying Bitcoin is very, very, very dangerous if you don't do it right. Very dangerous. You're putting hundreds of thousands, if not millions of dollars on a piece of paper, hoping that your house doesn't catch on fire and your Bitcoin disappears forever. These are titanium squares. And this one, check this out. They even sent it to me with my logo on it. Look at that. That's super cool, huh? These are Stamp Seed little titanium squares here that you can put your 24 seed phrases on. These can withstand well over 1,000 degrees of heat. In case your house were to catch on fire and this is sitting in a safe or something, these will survive the fire most likely. Titanium is extremely strong. And basically, you're probably wondering, well, how do I write on titanium? Well, check that out. How's that for a hammer? Yeah, there's a whole inscription kit in here that I'll show you. If you want me to do a full review of Stampseed, let me know. But the reason that I'm bringing up Stampseed right now is because it ties very well into our content today. You need to own assets, right? The Fed has basically given up on trying to get inflation under control. So if you want to not cease to exist as a member of financial society, you need to own assets. You need to own gold. You need to own Bitcoin. I guess you can own stocks. They're going to do pretty well, but you especially need to own Bitcoin. And if you want to keep your Bitcoin safe, I highly recommend Stampseed. So big shout out to them, and thank you to them for this. Check that out. That is awesome. Big shout out to them. More content on that to come if you want. Now let's get back on topic. Where are we going? Most important thing that we need to talk about is the fact that the Federal Open Market Committee is going to most likely cut rates twice again this year. And this is very much validating our prediction that we're going to see a major run up to $130,000. If you'll recall, our predictions were, to start with, Bitcoin hits $118,000 by September 17th. Yesterday, we hit $117,950. I'm going to call that a victory and claim that one. Our second prediction was that we were going to have an announcement of more rate cuts, and that was going to go ahead and begin to be priced in following the speech yesterday, and that would lead Bitcoin to a new all-time high. We can definitely see that this is setting the stage for that. If you look at the S&P 500, after this meeting, it has started to rally dramatically. S&P 500, after this meeting, rallied a total of 0.67%, which doesn't sound like a lot, but when you're dealing with the entire United States stock market, you're talking about hundreds of billions, honestly, probably over $1 trillion. Probably about $300 to $400 billion of value add in one day as a result of this news. We also have seen a major correction on the Dixie. Now, it's recovered some because people are thinking that this might end up being good for Bitcoin, for the dollar. But in the long run, it's not going to be, because cutting rates means that the Fed has basically given up on inflation. As the dollar inflates, that leads to a weakened dollar, which means that Dixie, even though it's not doing so right now, over the course of the next couple of years, as a result of these rate cuts, while inflation is still not under control, is going to most likely end up becoming very, very rampant. Jerome Powell talked yesterday about how we're in this odd situation where the labor market's not doing great and inflation's not doing great. You know what that's called, right? That's called the first stage of hyperinflation. Okay, let me just put myself on a soapbox here for a second. You guys are thinking that is the first stage of hyperinflation. When you see any market go through hyperinflation, the first thing you see is the labor force participation suffer, and then you see inflation get sticky and unable to be controlled by the central bank. The Fed is losing control of the dollar, and they've basically admitted it as of yesterday. If you needed a day one, hour zero of hyperinflation, it was yesterday at about 2:55 when Jerome Powell was answering questions. The Fed has lost the ability to keep the United States dollar inflating at 2%. Those days are behind us. And so this is, once again, one of the reasons that you need to own assets, and you need to own them now, because you're going to run out of time. Over the next few years, as we see the Fed continue to lose its grasp on 2% inflation, you're going to see assets such as Bitcoin and gold explode. You're going to see gold go to $10,000 an ounce. You're going to see Bitcoin go to 250, then 500, then $1 million. You're going to see the S&P 500 triple. You're going to see massive growth in these assets, partially because they're being more adopted as people are jumping off of the sinking ship of fiat, but they are also growing because the fiat that they are denominated in is also being debased at a rapid rate. So let's go ahead and build a new chart here. One thing I like to do every once in a while is just hit this button over here, delete button, remove drawings, start from scratch. The most important thing I want to point out here is this level of resistance right here on the Fibonacci Golden Pocket. The Fibonacci Golden Pocket sits right here. If we draw a retracement from our all-time high at 124,500 down to where we are right now, you will see that we are sitting at the exact 0.618 Fibonacci level, which is 117,867. That's why we rounded up to 118. But I actually told you, if you go back and watch our video, the specific price target we had for Bitcoin by the Fed rate decision was the Golden Pocket, which is actually a range between 117,850 to 118,450. That's the range that Bitcoin's stopping out at right now. The good news is we had an inverse head and shoulders pattern right here that was pointing us up towards the Fibonacci Golden Pocket. As you can see, it's pointing at 120, which we have strong resistance at 118, so it makes sense that we've stopped here for a moment. But we also said last week, if you go back and watch our videos, that going up to 118 will actually build an even larger inverse head and shoulders pattern. I believe we talked about this in Tuesday, Wednesday, or Thursday's video, something like that. This larger inverse head and shoulders pattern that we predicted is going to be built has a price target of, ding, 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 $128,000. Rounding, that's 130. That's where our price target is coming from. Back here, somewhere around like right here, we predicted that Bitcoin was going to rally up to 118,000, have some consolidation around 115 to 116. That would build an inverse head and shoulders pattern that would then give us a price target with the neckline being at 118 of 129. This rally would then be supported by the announcement of more rate cuts as Jerome Powell realizes that we are losing the ability to control inflation, as he realizes that tariffs are transient and not a continual driver of inflation, which is something that he openly admitted in the press conference yesterday, and also just generally as the gold market and the S&P 500 go towards all-time highs, it makes absolutely no sense for Bitcoin to be at these levels. So with all of those predictions made, they have come true so far, and I fully expect them to continue to play out exactly the way that I just described. I fully expect that by the middle part of next month, we will see Bitcoin trading at $130,000, and that, by the way, will not be a place that it stops. That will most likely be a level that we don't spend much time at. It'll most likely be a level that we shoot straight through. So right here, I think that Bitcoin's going to be right up here, and so far we have a very strong trend line pointing us straight towards it. Here's our uptrending level of support. If we continue to bounce off of this and move to the upside, we will probably be at $130,000. Now, we may spike up there and drop back through it. We might not be at 130 on October 15th. The date might need to change. We might kick it back a week if things are slowing down. We might say it's coming a little bit sooner if things pick up. But generally, sometime in October, that's the main point. Sometime in October, I expect that Bitcoin will be trading at $130,000. We have all kinds of fundamental confirmations of that we've just talked about. Technically speaking, we've got a very strong bullish MACD cross. We've got RSI pushing up towards 62. We're only at 118, going up to 130. Would probably not even push us above 80, which is a level that we've been to multiple times in recent history. We have very strong RSI MACD. We have very strong longer-term moving averages. For example, right here, we can bring up our different moving averages, the 300, the 200, the 100, and the 400. See, all of them are giving us support. All of them. Out here on the monthly, on the weekly, they're very strong support. On the 3 daily chart, we didn't even need to revisit the 100 on that interval. You can see they're all giving us very strong support. All of them. On the 12-hour, strong support. Everywhere, strong support. We're very much above all of them. Even down here on the shorter-term time frames, we have higher highs and higher lows forming. This might be a little bit of a rising wedge. We might fall out of it, drop back down 114, 115, bounce, rally. That's okay. That's fine. We also might just go parabolic at 118 when we break it. But the point is, in general, Bitcoin is moving to the upside, and from a macro perspective, the next leg of the bull market is here. Now, this leads us to really two major possibilities. That's bullish and more bullish. The bullish base case is that Bitcoin rallies up to 130 to 150 before the end of the year. The more bullish bull case is that Bitcoin rallies up to like 180 to 200 by the end of the year. And both of these are possible. You might think, well, Jeb, how is that possible? Well, you're about to have trillions of dollars flow into Bitcoin over the next few months as a result of the fact that it broke all-time high and people have profits from gold they want to do something with. You're going to see a small correction in gold, which will lead into a big rally on Bitcoin. That's what I believe is going to happen. From that point in time, if we see a rally to 130 to 150, which would be conservative, then I think the bear market is canceled, to be quite honest with you. If this is a slow rally, slow off the start rally, and we only get up to 150 by the end of the year, I think bear market might mean 40 to 50% drop, but I don't think it means 70 to 80% drop, which is what we've seen in past. Furthermore, and maybe I should say on the other hand, if Bitcoin does rally up to 180, 200, 220 by the end of the year, then that's where you probably will see a bear market of 60 to 70%, but ultimately both of those bear markets probably land you in about the same place. I mean, for example, if you rally up to 150 and we drop 50% off of 150, that would be a drop down to $75,000, obviously, right? But if you rally up to 200 and you drop 70% or 60%, that's a drop down to $75,000 as well. So what I am anticipating is that if we go into a bear market, the lowest that we're going to be seeing a bear market take place is a smaller correction off of a smaller rally or a bigger correction off of a bigger rally, both of which lead us into about the same territory, which is probably somewhere between $60,000 and $100,000 at a bear market bottom, which means these are phenomenal buying opportunities at 117, and I highly encourage you to take them, even if you might get a 3-month window at some point next year to acquire more. Great. Buy more on the discount. But the point is, one day when Bitcoin's trading at 1 million or 2 million or 3 million or 5 million, can that happen? Absolutely. To reach parity with gold, we now have to have like a $1.4 million Bitcoin. By the time we get there, it's going to need to be a $3 or $4 million Bitcoin because gold is rallying so fast. Capital is moving into sound money faster than we've ever seen in the last 100 years at least. You are going to be very happy whether you bought at 117 or whether you bought at 92. And to be honest with you, there is a very real possibility that Bitcoin rallies up to 180, has a 45% drop. That's the bear market, guys. Done, and we never see a sub 100K Bitcoin ever again. That is a very, very, very real possibility. So I'm not going to give you financial advice, but what I will give you is this. Based on all of the analysis that I've done, based on where the Fed is going, based on the technicals, based on the fundamentals, based on $60 billion of inflows into the ETFs, based on what strategy is doing, based on strategic Bitcoin reserve, based on retail adoption, based on the Federal Reserve not being able to get inflation under control, based on all of this incoming data and more, we make all of our decisions based on data, not on emotions. Based on all of this incoming data, I dump as much cash as I possibly can into Bitcoin. That's what I do. That's what I do. If I got extra money, buying Bitcoin with it. That's what I do. I pay my bills. I make sure that our company's expenses are covered. We make sure we have a little bit of cash savings. Not a ton, but a little bit of dollar savings. And then we dump everything else into Bitcoin. So while I'm not going to tell you what to do, I will tell you what I do, and you came here for my input. So make of that what you will. But here's the point. We are entering a 10-year period where we are going to separate the goats from the sheep. And the people that do not invest in hard, scarce assets are going to be the ones that get left behind. If you want to succeed for the rest of your life, then you need to acquire hard assets, whether that is real estate, gold, or Bitcoin. I believe in all three. I most believe in Bitcoin, though, with the vast majority of our net worth not in gold and real estate, but in Bitcoin. Those of you that do not acquire hard assets, you keep it in cash, you don't do anything for saving, you live on everything that you make, and you don't put away some for a rainy day. You, my friend, are going to get poorer and poorer and poorer for the next 10 years as the debasement of the United States dollar accelerates. This is the first time in over 30 years that the Federal Reserve has cut interest rates when inflation is running this hot at 2.8 to 2.9%. The last time they did this was in the mid-90s. We have not seen that happen before. And by the way, when we saw that happen, the United States was in a surplus, and we had a debt that was less than $2 to $3 trillion. Our debt is now 10 times higher. This is unprecedented what the Fed did yesterday. And it is basically them throwing in the towel and saying, Target 2 is unreachable. Jerome Powell didn't want to say that, but his actions spoke louder than his words. Game's up. Dollar's dying. Make a choice. If you enjoyed today's video, hit that like button, subscribe to the channel. And when you go to self-custody, consider fireproofing your Bitcoin by checking out Stamp Seed. No, these do not have any seed phrases on them, so you can't pause the video and try and steal any Bitcoin from me. You get a really cool hammer, too. This thing is chunky. Like, dude, it's like, dang, it's really good. So make sure to check it out. We'll throw it a link in the description box. Just for now, go to stampseed.com. Check them out. And here, I'll pull it up real quick. Pull them up real quick. Give them a shout out. Here you go. Stamp Seed. Come check them out. Really, really awesome. Really awesome stuff. That's what the hammer's for. You're able to stamp the letters in the actual titanium here so that it can withstand the heat, right? So definitely make sure to check them out. We're going to be giving some affiliate codes and whatnot over the next couple of days, so make sure to check that out. Very excited. Very exciting stuff. We very much appreciate all of you for being here. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, leave some comments, and before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.